Okay, everybody, it's me, Gregory Mannarino. It is Tuesday, September 6th, 2022. People, look, there's a lot of stuff going on. I want to talk about a few things with you, but what we need to keep our eyes on clearly right now is whether or not we're going to gain some stability here in the debt market. That's what this all comes down to. Nothing else really matters here in this environment. But I want to tell you this real quick. I've explained to people for years and years and years, maybe for a decade here, that we are marching into a new system, a completely new system, a new set of rules, a new paradigm, more control, power consolidated in fewer entities. Okay, we already understand who really runs the show here, people. It's not kings, queens, monarchs, dictators, presidents, Congress. It's the banks. Period. They run the economy. They run the financial system. They are the entities that are responsible for what we're seeing now happen to people worldwide, globally. Surging inflation, people struggling, can't make ends meet here. Look, again, for a decade, I've explained to people that, this is an elimination process. It's an extermination process. An entire class of people are being wiped out. The middle class, we're going back to a feudal system, a two-tier society, extreme haves and extreme have-nots. That's the situation. That's where we're going. So, all this other stuff here is interesting to look at, and it allows you and I to at least attempt to keep ourselves on the right side of the equation, realizing, look, everybody knows that this is going on. All of us, we the people of the world, are slaves to a beast system. That's a fact here. It's an incredible thing to be living today, to realize that the world right now is not what it used to be just a short little while ago here, because there's this hyper bubble in debt, which is now threatening to burst. And how do we know it's threatening to burst? There's a lot of ways to tell. Okay. This instability that we're seeing here in the debt market is a huge tell here. The fact that central banks are in here faking liquidity in the market, the Fed's repo program, trillions of dollars moving back and forth between organizations overnight, all this stuff that you know, if you've been following this blog, the gyrations in bond yields, this is not normal, okay? Like I've covered with you a million times. That market is supposed to be stable. We're not supposed to be watching that 10-year yield jump up and down like a yo-yo. So, look, you're never going to hear this stuff from the mainstream media. They're not going to tell you where to look or what's going on. They really don't care. They're all reading scripts, these people. You know how it works. They want you looking in one place where you should be looking at something else completely. Again, look, what do? They say, okay, look at the stock market. The Dow Jones Industrial Average, 30 companies. Forget about the broader market and forget about the market driver. They don't want you looking there. They want you, in some kind of state of confusion, some kind of state of disarray, not knowing what you should be actually doing. Imagine if, for example, they were telling people, hey, you know what? There's instability in the debt market and we can see it by actions of central bank who are buying it all. ECB's admitted they're doing it. Fed's doing it too, although there's no admission. Central banks around the world continue to inflate. Period. So, look, there's a lot we can take away from this, but just going back to what I said here in the beginning of this video, just understand what's happening, moving towards a new system, a completely new system, a lot more control, and an extermination of an entire class of people, and how you got to keep yourself on the right side of this really isn't too difficult. Forget about the market. Forget about trading and whatever that. You got to be on the opposite side of this debt bubble. And to me, I'm not going to change. I'm never going to change my stance on this, okay? To me, it's physical metals. It's more specifically silver. I still stand by what I've said since day one. day one over a decade ago, that physical silver is the most undervalued asset on the planet. Period. The end. And we understand that you got major banks, none bigger than JP Morgan, the largest bank on the planet by assets, who continues to rig the price via the derivative of silver lower. So what do you want to do? If we realize that's what's going on, silver, gold, other metals too, platinum and palladium. Silver is my all-time favorite. You got gold here as my second favorite. Platinum and palladium, I guess, run, about equal there. But I still say it's silver anyway. So that's where we're going. A new set of rules, a new paradigm, more control, more losing of freedoms and liberties to a much, much higher degree. All right, look, with that out of the way, let's look over here at the stock market here. The first thing I looked at this morning was the 10-year yield. 10-year yield sitting at 3.25. Now, let's keep our eyes on that. The MMRI sitting at about 217. We were higher than that. Last week, we bumped up to 222 with regard to the Mannarino market risk indicator. Link in the description of this video. I have explained to all of you that we need to see the MMRI and the 10-year yield, stabilize. Okay, the 10-year yield, let's focus more on this because I keep getting questions. I'm checking my email box this morning. Let's just throw out a hypothetical here, people. If the 10-year yield would have settled at 3.25, let's just say, just settle here and stop moving around like that, the market would be okay with that. Okay, it's not so much the number, which I've thrown out a million times. It's the pace it's how fast the debt market is selling off. Global bond yields are ballooning. Big sign that things are not good here. Look, the market needs to see some kind of stability. And again, we're in a danger zone. All right, a period of time here, this September, next several months, where the market can be extremely volatile. Yeah, absolutely. But watch the driver. Forget about watching the stock market itself. All right, keep your eye on that 10-year yield. Let's see what happens here. Are we going to continue to see gyrations? Are we going to continue to see a sell-off here in the debt market? Because you know how the system works. It's illiquid. It's insolvent. If debt keeps selling off, well, that's a big problem. That's a big, big problem. It'll put pressure on the stock market as well. Let's look over at the Dixie here. Okay, this morning, the relative strength of the dollar, or the DXY, we're just knocking on that 110 door. I explained just yesterday that I feel sincerely that the dollar strength still has room to get stronger here. And that'll put pressure on commodities as well if that does occur. And I wouldn't be surprised to see the Dixie go much higher. Okay. In this environment, we need the sell-off here in the debt market, sell-off here in the stock market. You got this threat of instability here. So what's cash doing? It's making its way into the safety of the dollar. The dollar's a safe haven. You got to be kidding me. It's a unit of debt. It's an unbacked liability being dispersed by a runaway central bank here, who's determined to fulfill their end game, to be the lender and buyer of last resort, to own it all, period. So on the back of all of this, you got stock futures that are higher this morning. Will they stay that way? In my view, it all depends on what happens with the 10-year yield. The overall yield curve, okay, is the most inverted we have ever seen in history. It's the biggest tell that you can ever imagine that our economy is in free fall. This is a global phenomenon. But, we're not going into recession. That's what Janet Yellen said. She said, no, she doesn't see it. Neither do our politicians who are out there to twist your mind into every which way that it shouldn't be. Our president, the imbecile, explaining that we have no inflation. You're kidding me, right? Honestly. But this is what they're selling to people. Again, you can't make this stuff up if you try to. Gold right now is flat. Silver is catching a bid. Bitcoin still hovering around 20,000. Crude oil about flat. We'll see how that affects the market. We know what OPEC just did. They cut production. I mean, like an infinitesimal amount here. It's more like a token cut. But you know how that works too. Crude oil being the lifeblood of the market. If they get crude oil higher, and I believe they will via some mechanism, false flag, refinery fire, bombing, terrorist attack, American airstrike on something or whatever they got to do to prop up crude. What does that do? That gives the financials or the banks a boost because the banks are leveraged beyond their eyeballs in crude oil. It'll give the entire energy sector a boost in the market too. But it all depends on that 10-year yield, the debt market as a whole stabilizing. If we continue to see bond yields ballooning around the world, that's a bad sign. I mean, you know this better than anybody. It's the truth. All right, people, look, I think you got it covered. You know what to look for. And I think you know what to do about it, okay? I don't care at all what they're doing, what they want to do to the price of precious metals here. It's the biggest hedge on the face of the earth against the hyper bubble in debt because you know how it's going to play out. Debt market is going to implode, whether it's going to be now or who knows when. It's going to happen. Global debt is going to balloon. You want to be on the opposite side of that trade. When the debt market implodes, and it's going to, and I say it again, it's going to wipe out the stock market. Cash is just going to move into commodities, people. And we're going to see inflation like you can't possibly believe. I mean, it's going to make what we have now look like, I always say, a walk through Central Park eating an ice cream cone on the most beautiful spring day you can ever imagine. All right, people, look, like I said, I'm going to let you go. Please comment here, share the video, get it out there. Let me know what you think about all this, and I will see you at the end of the day.